Hello and welcome, everybody. Happy Thursday afternoon. Thank you for joining me. We are in the heart of earnings season, and that's why we're doing the show today. Oh, oh, tech support. All right, we're back. So, guys, it's the heart of earnings season. We don't do these live streams all the time. We do them when there are important things to talk about. And I think right now it's not about Apple's report after the bell. We're tuning in. We'll cover the numbers when they come out in about 12 minutes here. It's about the whole Mag 7. It's about the whole US mega cap growth trade, right? The whole American large cap tech theme. It's been under pressure, but it's a mixed bag, right? There's some that we still want to own. There's others that, we're feeling more cautious about and maybe want to reduce. For the most part, the bull market is very much intact, right? Breadth is improving. We have bullish seasonals coming underway soon. The intermarket landscape is shaping up. International equities are starting to work in a better and better way. Cryptos are working. Risk appetite looks good. Defensive sectors are getting no bid. Everything's looking very positive out here. However, the Magnificent Seven stocks, Apple, Microsoft, Meta, Google, Amazon, Tesla, Nvidia, they've been trending so well for so long. They've been the market leaders for 2, 3 years now. Maybe we enter some sort of an environment where they're not the only game in town anymore. So let's go through each one today. Shout out everybody in the chat. Thank you for being here. Thank you for being patient. I'm all alone out here. I'm literally on an island. Like I'm on an island. I live on an island, but I'm literally on an island this week. Everybody's in New York City having fun without me at the Portfolio Accelerator. And I'm back here all by myself, just trying to hold it down. So, what's up, chat? What's up, Alex? Joe? Joe, I might move to Naples soon. Swear to God. So, we should talk. James, every time he says tariffs, drink, James, or buy more stocks. Because I keep hearing tariffs, but I'm not seeing any tariffs. I keep hearing tariffs, and I just see China going up every day. We're going to talk about China. Dawson, love Dawson. Jenny from the bank, that's so good. I was just talking about the Bronx. Kenneth, what's up, man? Is that a compound shout out? Turn my mic on. Love those guys. Miss them. I would have been hanging out if I was in New York City. See, I didn't get to see all my friends this week. I know, Josh, I was late and I'm sorry. I want to hear your guys' comments. I want to know what you guys are thinking about the Mag 7 reports. Listen, last night wasn't a good one. Wasn't a good one. But did you see IBM? So my point is, beneath the surface, good things are happening. The Magnificent Sevens might be coming under pressure, right? Maybe the Meta report. Well, actually, Meta was pretty good. But maybe the Microsoft report. Meta indecision day today. I wouldn't buy this here. I wouldn't buy this. They pulled those gains forward on this report from Meta. Microsoft, bang, down 6% today. Tesla trying to figure it out. I really like this. I'm not gonna lie, I bought some TSLA calls today. All right, so there's some I want to get involved in. There's some that I want to add exposure to. There's others that I'm feeling more cautious about. But like last night, the big story for me wasn't the Mag Sevens, it's IBM. I mean, look at this is old blue, like the original. This is how you draw something like this. It's massive. This is a powerful pattern. You know what this is, guys? This is to me, this is AI consulting. When I think of IBM and I see this base breakout, I think Accenture, Gartner, Cognizant, right? What a big business this will be in the future. We all sit back and laugh about IBM because Watson didn't work out. Maybe they have a better plan, right? So the point is, stocks continue to trend well. The reactions to earnings on balance continue to be, I would say, overwhelmingly positive so far this quarter. Things are looking fantastic. If you're just looking at the biggest stocks or the indexes driven by the biggest stocks, you might not be getting the full picture. So I want to go through every Mag 7 right now. one by one. Let's walk through it. Let's talk about earnings, whether they've happened or whether they're about to happen, and let's figure it out. And then we're going to hit China real quick, and then we're going to go because everybody has things to do. Um, and I'm excited for dinner tonight. What's up, Tom? Shannon. We were in Fort Myers, Shannon, like I don't know, three weeks ago. We checked it out. We went to this beautiful, like cute little downtown area. We had some dinner at like an Italian restaurant. We did the whole Airbnb thing, and we're thinking about it. Like Fort Myers is probably second on our list after Naples. But we're coming up to the mainland. Living in Naples, I remember those master. All right, awesome. Shout out Florida though. It's a bull market for Florida, and I love that. All right, so we're gonna start with Apple. Apple is about to print. Let me just double check. I don't want anything to happen while I'm talking about it. But yeah, typically Apple's 420. I can usually count on Apple coming out at 420. So we got about 7 minutes to go. Here's the thing with Apple, right? Everything else sold off the other day, like this disaster day, Monday, for the AI trade. Apple got a huge pop. Do you know why? Apple is the one company of the Mag 7s, and of course, Nvidia is a little bit different because they're selling the supplies to the other Mag 7s for now. But Apple's the one that's been like, hey, let's cool the jets on this. All right, let's hit the brakes a bit. We're not going to come out here and spend $10 billion, $15 billion a quarter trying to build out like the next AI super product. We're just going to hold off. So when everybody else was getting killed on Monday for over investing, maybe in the AI trade, Apple popped 3%. And then it followed through on Tuesday with another 3.6%, right? And it's held those gains. And now it's got earnings coming out here in about 5 minutes. With Apple, you never want to doubt this one. So I remember a time last year where we were looking at the pattern Apple and we were saying, this can't be a top. It's the middle of a bull market. And it looks a lot like it does today. This was a setup. And we were looking at this pattern, we're saying, there's no way, right? This is Apple. Like if Apple goes, the rest of the market's probably going. And that's why I'm going to draw these arcs in green because they're not tops, right? And I think that's the same case today. And how do you play it in something like Apple? Well, you don't want to be long below the pivot lows here from a week or two ago. And if you're looking for confirmation, I'm sorry, you don't want to be short. Or no, yeah, you don't want to be short if we're above these pivot lows called 219. And you definitely want to be long if we're above this VWAP from the pivot highs from December. And we just took it out the other day. So I think Apple's getting the all clear signal. If this is a solid report, you have another level here. If you're looking for like a tactical level for a trade, called 237, right? That's the pivot highs from October and July. It probably digs in there. Then you got the VWAP coming in right around 235. So let it dance a little bit after earnings. But I think Apple is in a great position. The stock is not cheap. It hasn't been cheap for a long time. But I like it, and it looks better than a number of its peers right now. For example, here's Microsoft. Microsoft was shaping up in this channel, just dug in at the lower bounds, and I was thinking, okay, it's going to dig in here and pop a little bit, but it didn't. Right? It didn't. Instead, Microsoft got pounded today, down about 6%. Okay. So this is a waiting game. This is a really messy trend over the short to intermediate term, but it's also a range within the context of a very nice primary uptrend. In fact, within the context of a structural uptrend, right? When I zoom out, you can see that very clearly. So with Microsoft, I think we want to be patient. And for me, the ultimate confirmation for Microsoft, and look, we just got slammed back towards the lower bounds. So if you're a trader and you're looking for a trade, the 400s are your zone, right? You could trade this range from 400 to call it 450 all day. That's not too juicy for me, right? Trading a 10% range on a mega cap like this. For me, the real opportunity is when we break in one direction or another. For example, maybe this is a distribution pattern and the bull market ends 3, 6 months from now, and we finally get a breakdown from here. You want to short it below 400, go for it all day. The more likely scenario, though, is that this is some sort of a continuation pattern, right? And we end up drawing it like this. And a couple weeks or months from now, Microsoft is revving back up, back at the upper bounds of this range, and we're talking about buying a breakout north of 450. And if you want to jump it, the way you would jump an entry in a pattern like this is you would drop a VWAP from those pivot highs, and you could actually jump it pretty soon here at about 425, because that's how range bound this has been, right? The VWAP is actually going to come in like smack dab in the middle of the range. For me, for right now, Microsoft is just not offering a good opportunity for trend traders, right? We want to either be up and out of the upper bounds of this box or some sort of downside resolution through the lower bounds of this box. But if you're trading this 10% range, it's just going to be a sloppy mess. And I think that's going to be tough. Next up is Nvidia. This is probably the one that I want to stay away from more than any right now. And it's also the one I was most bullish on not long ago. Why? Because we were setting up like this and we had this nice little coil right in the context of what looked to be a little tactical base, right? So I thought, okay, nice. This base is going right into this little range, and then that's going to resolve to the upside, and we're going to go from there. But no, that's not what happened. Not what happened. And Nvidia, by the way, doesn't have earnings until the end of next month. So we're about a month out still from Nvidia earnings. But look at this. This for now, fine. It's a very tactical range, but it's still range. And that broke lower. We haven't seen patterns break lower for Nvidia in 2 years. So this is to me a change in character that we really want to be paying close attention to. And I think really the last line of support for traders is the VWAP from the August lows. Remember the yen yo-yo day on August 5th? That is such a good place to anchor VWAPs from for support levels. We're below there now. If we can get above there all day, I'll be pounding the table. I'll be saying scoop and score, Nvidia above 130. Let's go. Right? Because if we're above 130, we probably see 200 quick. However, if we're below this 130 level here, this is a tactical top. And I think Nvidia starts to trade in a much broader, sloppier range like this. Right? So I think the lower bounds of the range for Nvidia will line up with these pivot highs from Q1 of last year around 95. And the upper bounds will be at the pivot highs from late last year. And that's a 50% range, like 100 to 150. Who wants to trade that? That is a sloppy mess. And I think for trend traders, it's above 150. Let's go. Or if we're below this 130 level at this VWAP, you want to be more cautious and probably stay away. Next, and this is my favorite. I had marked up all these nice charts with the relative trends, and I'll show the relative trends here. On Optimo, we couldn't get them up. But for something like Google, guys, it's simple. You got a tactical breakout within the context of a much larger base breakout. Like this is as good as it gets. I think Google's winning AI. If I could buy one of the Mag 7s right now, I already own too much Google. If I could buy one of them today, it would be Google right here. And I'll show you why. We'll zoom in. But before we do, I mean, yeah, look at that. What a chart. What a chart, right? So these are the prior cycle highs from November of 2021, coming around 150. Massive breakout April of last year, ran up to about 190. Hard retest right back to those prior cycle highs, right? Watched that former resistance flip into support. They dug in here, right? You can see it. Okay. Buyers show up exactly where we would expect them to. Digs in, rips higher, hits that target again, and now it's coiling in such a beautiful, orderly fashion, coiling right above the pivot highs from last summer. I think Google's going. And if you want the next stop, I think you zoom out and you give it the fib. Right? So when you fib it out, it's also perfect, right? We're right there. It's called 190. That's your breakout level. You could trade Google 190 to 260 all day right now. I think that's a nice trade too. You can pick up like 30%. That's fantastic. This is the best of the Mag 7s. Why? Because the leaders, the real leaders, right? Like Meta, I don't want to buy this here. That's really why, right? The best ones, look, Meta's already overbought. Another killer chart, right? God, if we're talking about just these killer uptrends in the Mag 7s, look at Meta. Fantastic, but it's smack dab in the middle of a range, right? Like, where do we define our risk? We wanted to get in and buy Meta on a retest of this Fibonacci right around 575 a couple weeks ago. Now the next stop is like 870, right? So I don't know how to trade Meta from here, the way it looks today. What I do know is that Meta is a stock that I do want to be long and buying dips in over longer time frames. So this is the relative trend of Meta versus the S&P 500. I mean, how incredible is this? Textbook cup and handle, right? Beautiful breakout, boom, 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 boom. New all-time highs, absolute and relative basis. This is the best one. It doesn't mean that it's the most actionable one. Amazon, also definitely worth mentioning here. I think Tesla is about to do what Amazon just did. Let me explain. So here's the base from this cycle, right? Really nice reversal. Here we go. We have the prior cycle highs. We eventually break out. It was a little sloppy for sure. We had some sloppy moments. Looks like we, got an initial breakout last summer. Ended up being a false start. Slammed back into the box. That ended up being a whipsaw. We shake it higher, and then we start hitting some targets. But with Amazon, first of all, we're almost at the first target. And if you were going to get in tactically to a trend like this, you bought it last week, right? When you're trying to get into something that's already in a primary uptrend, you are basically, if you're doing it right, you're buying the breakout of a continuation pattern. And in the case of Amazon, it broke out from this continuation pattern last week or even Friday, the week before. So I think you're a little bit late here. Doesn't change the fact that this is a beautiful uptrend over longer time frames. It's something that you want to be long and stay long. I wouldn't enter it today. Again, look at the difference between something like this and something like Google here, right? This is perfect. We have a clear level. We have an objective. We're coiling on it. We're right there. You have a high from this summer to trade against. And then you have 2 months of pent-up energy in this coil. Next, I take it back. I said I would be buying Google today. If I were entering a Mag 7 stock, I would split my money between Google and Tesla. How about that? I'll show you why. I mean, this is it. This has been the Trump trade. Started in November. It was 100% doubled from just before the election to, the reaction highs afterwards in mid-December. If we fib it out, check it out. Your prior cycle highs are right there. We're coiling. The next stop would be, I don't know, 594. Let's draw it like we're drawing the others. Primary trend reversal, albeit a little bit sloppier, right? This one was a little bit later to the party compared to its Mag 7 peers, but you have the breakout. And then you have some, nasty retests of these prior cycle highs right here. And when you zoom in, the way you want to trade something like this, if you're interested in Tesla, you say to yourself, if we're above 405, the November 2021 highs, call it 410. Okay. If we're above there, I want to be long. Where do I get confirmation that my trade is working in my favor or that, I'm doing the right thing? I think you get confirmation always in a setup like this above the VWAP from the pivot highs. In the case of Tesla, those pivot highs on an intraday basis are December 18th, and we're right there. So that confirmation would happen about 5 points higher from the current price, right? Call it 415. Trading at like 400 right now today. Yeah, so 415, 420, bang. Next stop, 590, 600. I think Tesla is set up just as well as Google. I also think it has the short-term momentum on its side. Now, that's a little breakdown on the Mag 7s. Apple's earnings are out now, and they've had a little bit of time to shake and dance. The initial pop was like a nothing burger. Let me go read the print, and then I'm going to give you guys a China chart, and we're going to go. Oh, ooh. Looks like Apple is still not out. Wow. All right, so we're going to go straight to China. Look, here's the deal with China. It's very simple. This is the pattern. This is the base. This has been a trend reversal, 3, 4 years in the making. Monster base. We're just getting out of here now, right? If you drop a VWAP from those highs, those reaction rally highs from October of last year, we're taking them out. You got the upper bounds of this base right around 33.50. It's go time. New bull market for China. But think about it. A couple things are going on here. I haven't seen this good of a setup for a group of stocks, right? Or an area of the market or a theme within the market. I don't know, 10 years. Because sentiment is lining up. Chinese equities are hated more than anything in the market right now. Fund managers have run from them. No one wants to own these stocks. They call them uninvestable. Everyone has moved in terms of EM managers. They've moved out of China into India over the past 3, 4, or 5 years. All these geopolitical risks and concerns. There is so much money on the sidelines waiting to pour back into China. Sentiment's terrible. I haven't seen sentiment this bad for a theme in many, many years. Secondly, valuations. These are the biggest and best technology companies in the world outside of the United States. Right? So you have your Mag 7 names who dominate the world of technology. Anything new and innovative, like they're going to be in front of it. They're either going to make it or buy it. And there's no one else like them. You go to Europe, there's not these like mega cap tech behemoths, right, that run the European tech sector. No, in China, they do have that situation, right? And these are the only companies big enough and with the technologies and the people to develop new innovations, new products and services that can compete with the Mag 7s, right? They have the pocketbooks, they have the people, they have the human capital, right? They have the technology, they can do it. They're the only other companies. They're trading at like single digit price to earnings multiples. These tech stocks have never been so cheap. So the number one competitors to US tech, and that's what you saw Monday, a huge repricing of the whole market where investors said, oh, maybe AI, right, and this new technological revolution won't be completely dominated by the United States. Maybe China will win a little bit. And that was the reaction. Down, what, 15, 20% in Nvidia? So I think it's irresponsible not to own Chinese tech stocks right now. This is a live stream about the Mag 7. And that's why we're talking about this. That's your hedge. If you're very long Mag 7s, if you're hanging on, you're clinging on to your Mag 7s because they've been so good to you, and I think you should. I think that's fine. And you're saying, oh my gosh, how do I deal with a situation like Monday? What if that persisted for a couple days or a couple weeks? What would that do to my portfolio? Well, I think your hedge is simple. Take some of those profits that you've made in Nvidia, Microsoft, Apple, whatever. And Apple's reacting positively right now, up about 6 points on its initial reaction candle. Take some of those profits, right, that you've made in the Mag 7s over the past 2 years and reinvest them back into China. That's your hedge. Buy Alibaba, buy Tencent, buy Pinduoduo, right? JD.com, whatever. Build your dreams. In China, there's an equivalent for every Mag 7, right? So for every Amazon in the US, there's an Alibaba in China. For every Google here, there's a Baidu there. For every Meta, right, there's a Tencent. For every Tesla, there's a Build Your Dreams. We can go on and on. For every Expedia or TripAdvisor, whatever, there's a Trip.com. For our video game companies, they have NetEase. They have absolute powerhouse tech companies trading at garbage multiples, priced like they're going to go bankrupt, or like the Chinese government is going to take all of their money. I don't think that's going to be the reality of the situation. I think these companies bounce back. I think they bounce back in a big way. And if you've won big on US tech stocks, I think it's very important and prudent to consider taking some of those profits and reinvesting them overseas into the only true competitors, right, for the growth themes or mega trends that the companies that you've made money on in the US have benefited from. I think that's your hedge. Go buy some Chinese stocks. Apple Q1 Greater China net sales 18.5 billion versus 21.3 billion. Not so good. A consensus Q1 iPhone net sales 69 billion versus estimates of 71 billion. Also not great. iPad 8 billion, 8.09 billion versus 7.3. Mac 8.99 versus estimates 7.96. So it seems like they're beating on like the less important products. Services net sales 26.3, estimates 26. I think services are as important as anything for Apple right now. Wearables, home and accessories, 11.7, estimates 12. So the numbers, the sales numbers by product line didn't come in so hot. Apple's Tim Cook says we're monitoring the situation regarding potential U.S. tariffs. Apple has no timeline for when Apple Intelligence will be available in China. More is going to keep coming out, but the headline number was 240, which beat by about 4 cents, nothing special. And then revenue 124.3 billion versus an expected 124.2 billion. These mega cap tech companies, right? They're making like hundreds of $1 billion in revenue. Isn't it amazing how they come in so close to the street's numbers? Oh God. Probably not by accident. They're good at what they do. They have very large accounting departments. It's not that they're managing or cheating the numbers, but they're paying attention to them. Every day that goes by, they're running their P&L and they're making sure that they come in close to the street. And if they're not, there are adjustments, right? Bottom line adjustments that they can make to get there. So that's how it always comes so close. These CFOs are really good at what they do. I think for now, the Apple report is nothing special. It doesn't excite me. I think you probably have to listen to the call. The problem with all these stocks right now is that they're trading on expectations of the future. They're always trading on expectations of the future. The difference between today's expectations of the future and 2 years ago's expectations of the future is that the future is now AI, right? So 2 years ago, Apple was trading on its future iPhone or iPad or services numbers. Today, it's trading on what's it going to do with AI. And that's the case for all these Mag 7s. So all of the existing numbers and product lines and services have become less and less important. Ask a company like Nvidia or Tesla. Tesla's reaction today was great. The report, I don't think they beat. So pay attention to the reaction. The market determines if they beat, not the headline numbers, right? The street misses all the time. Pay attention to the reaction. If the market's rewarding the stock for the earnings that it just reported, that's probably a trend that you want to be on the side of. All right, everybody, going to check the chat real quick before we head out. Oh, wow, it looks like the chat is so hot. PDD, I love it. Wouldn't buy China for, yeah, nothing too compelling in this Apple report. No, I don't see anything. Dan, just look around, dude. I bought like Neo today. This EH. Like there's some really shady stuff in China if you want the juice that you could find. Yeah, look at this EH. Like I'm jumping that pattern breakout. Here's Neo. This is like a Chinese EV. I don't even know. This is probably a fraud, right? But you got this sweet little coil. So it depends how junky you want to get. Another one that stood out, like I love the Chinese online education companies. Look at this. This has been one of the strongest stocks in China this whole cycle, right? This is New Oriental Education and Technology Group, right? This base completed back in, I don't know, 2023, got the breakout, hit a couple of targets, and then you got this massive top. Here's the thing. Like I said, this is one of the leaders in China. So now that China's erupting and entering a new bull market, is one of the early cycle leaders going to complete like this massive top? I doubt it. So when you zoom in and you see this little coil here, it's like this is something I'm going to buy all day, right? And that's going to deliver you some good juice too. If you want to play it through the options market, that's for the real crazies. I'm doing it through both calls and common, but I can see a situation here where we pop and rally, and something like EDU gets back into this old box, and this one could really print. I mean, imagine if it went back to those old highs from last year. We're talking about much more than double from here. So there's a lot of spicy setups in China. I think you want to pull up the components of, ETFs like KWEB and CQQQ and FXI and start looking through all of those charts, see what you like. KC, I saw somebody throw out the Kingsoft. I mean, this has been one of the leaders too. Super spicy. One of the highest beta names you could probably find. I have no idea what they do. I am involved, but like, let's go. If we're above 10, you have to own this. How can you not own this? If this goes back to the prior cycle highs, we're talking about like 7x from here, 6x from here. Right. So China has opportunities that you're just not going to get in the United States due to the fact that this market has been depressed for so long. These stocks have been killed. They suffered the worst drawdowns during the last bear market. Then they suffered the most prolonged basing period. Other stocks, good stocks in the United States, they broke out years ago. and started rallying. You know, 3, 4, 5 targets have been hit in the best US stocks. China's not like that. It's like the nastiest drawdown in the country's history that led into this prolonged base that took much longer than all the other bases. I think the pent up energy for this trade right now is absolutely crazy. I think it's impossible to have enough exposure to China right now. I think China, Chinese tech, Chinese mega cap growth, that's the story of 2025. I think these guys enter the AI market. They steal some significant share from the US stocks and stories. And I think that's all investors are going to be talking about, you know, come this time next year. And there's going to be a huge chase dynamic because everybody's poured out of these stocks. There's so much cash on the sidelines. EM managers are under allocated. I think they chase this for years. So let's go start building your positions now. China has arrived. All right, guys. Join us for the morning show tomorrow and every morning from 8:30 to 10 o'clock Eastern time right here on Stock Market TV. We'll be going through all the Mag 7 reports, you know, particularly the Apple report that's taking place right now. We'll digest these, talk about the charts, and talk about how we want to position moving forward. Thank you guys always for joining me on these live streams. Couldn't do it without you. All right. Happy Thursday.